I won't stop till I hear him say,
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. We really do appreciate it. Don't forget that once we reach 10,000 YouTube subscribers, that we are going to do a 100 XRP giveaway along with a CYPRX hat and t-shirt to 2 lucky YouTube subscribers. So we really do appreciate the love and the support here at CYPRX that you guys show the YouTube page. In today's video breakdown, as you guys can see from the screen share that I'm doing right now, we are going to go over a Gbpjpy trade analysis. We didn't send this one to the group chat. However, we didn't need to, because as you guys can see from the Discord share that I'm going to show you guys, multiple students were able to catch this trade. We had Lisette, we had Anthony, we had Zach, we had Justin, we had Emiliano, we had myself. Absolutely phenomenal trading morning today. I couldn't be more proud of the CYPRX students who are actually grasping these concepts that I'm teaching them and applying this information to their trading regimen and actually making it work for them. All right. Again, if anybody is interested in that mentorship program, the link is in the description down below. You guys can schedule a private Zoom call with me by emailing our customer support team. That is also in the link in the description down below. I would love to hop on a private Zoom call with you guys and explain to you what you can expect from the CYPRX mentorship, screen share with you all the course material that you're going to have access to, and introduce myself to you guys. Really do appreciate you for returning back to the YouTube channel. Without further ado, let's dive into today's video breakdown. So first, we're going to talk about the higher time frame correlation with the lower time frame utilizing the piggyback methodology. We understand a couple things about price action and where the banking institutions like to make their purchases from. And 9 times out of 10, that is where previous banking institutions bought from via previous sessions. Okay, so we have our session splits on. We see down here at the bottom on the 15-minute chart, this is the Japanese yen against the Great British Pound on the 15-minute chart. We can see where Asia session put in their buy orders, passed price action over to London session, and then London session put in their buy orders, and price rallied back to the upside. This is bullish order flow. So as CYPRX traders, I've taught you guys multiple times on this YouTube channel, we like to highlight these significant areas of interest and see if price can give us a discounted buying opportunity down into these structural lows on the higher time frame, i.e. because we are scalpers and intraday traders, we're looking for the market to come back down into these areas of interest and then show us a sign of reversal on the fractal nature of things, i.e. why I have my chart split, so that way I can show you guys the pattern that we look for to play out on the 1-minute chart before we seek to move in tandem with the banking institutions. And that is a rejection of discounted area, bullish intent, the market's showing us a willingness to grab liquidity from highs and make new higher lows. Once the market makes those higher lows, we are looking to get in on those higher lows to move in tandem with the bank and institutional interests to attack sellers. All right. Institutional traders like to attack areas of liquidity. Well, if we understand as retail traders that the market makers like to attack highs in the form of liquidity and lows in the form of liquidity, and they are not showing us a willingness to attack lows, guys, it's common logical sense. Where is the only other area of interest that they are going to seek to attack? It is highs. It is people that have over leveraged sell positions or people that have buy stops above highs, when the market makers are going to seek to attack those buy stops, activate them, and then put those individuals who are trading leveraged accounts into drawdown, so that way they have the fear of closing out a trade and losing money from the market. Again, the market makers are master manipulators at taking your money. Okay, so without further ado, let's jump into today's video breakdown. Here we can see where we highlighted that 15-minute area of interest, dragging from the candlestick bodies down to the wick and extending that box tool over. All right, so we extend that all the way over to the right-hand side till we come into the New York session. So this is the 15-minute logic in correlation with the lower time frame, just to show you guys. Once we broke previous market structure from where London session bought from, you guys can see here that London session injected money into the market. Banking institutions from London saw an interest in buying the Great British Pound against the Japanese yen at the psychological level 16200. So that is an interesting psychological level rejection that we can go ahead and mark off. We understand that banking institutions like to buy from psychological levels. They are not buying from support and resistance zones. Those do not exist in the market. The market makers can only see psychological levels. They do not trade support resistance methodologies like the majority of retail traders think. Okay, they are buying from these psychological levels in the form of discounted price. So London session banking institutions put in a buy position here. We understand that New York session traders are not going to buy from highs. They're not going to buy most likely until price gets manipulated down into discount where previous banking institutions bought from during London or Asia session. The Asia session low being all the way down here, the intermediary low during London session being right here. Now remember, New York session is on a restricted time from where they can start to place buy positions until they have to pass price action over to Asia session when their session ends, right? When New York session ends, they are time restricted. So most likely, what are they going to do? They're going to push price action down, manipulating sellers, and push price down into discounted buy positions from where London session bought from. And that was this trading scenario to the T. So let me go ahead and clone this onto the lower time frame chart so that way you guys can see how this box tool correlates. All right, so I went ahead and I cloned this over to the 1 minute chart. You guys can see highlighting from the candlestick body down to the wick and extending that all the way over how we were able to see discounted price on the 1 minute chart. So I will go ahead and I will get rid of the 15-minute chart and expand this 1 minute chart. You guys can see that same entire price action area of interest on the 1 minute chart now. This is that entire 15-minute bullish leg from A to B. So to catch this trade, one of the confluences that we utilize here at CYPRX is our Fibonacci tool, where it tells us most likely where discounted price via where the bank and institutions are going to buy at is most likely going to be. Again, if you're watching retail traders on YouTube tell you that this Fibonacci tool is some magic tool that is going to guesstimate where the future price of some Forex pair or some commodity or some cryptocurrency is going to go, you need to stop following them. You need to stop watching them. They are misleading you and guiding you in the wrong direction. This Fibonacci tool is a tool that was left behind by TradingView for us as retail traders to formulate where discounted price via where the banking institutions like to purchase at anywhere between 62 to 100% discount. Anything below 50% discount is where the banking institutions like to buy from. Here at CYPRX, we like to minimize our risk and maximize our reward. So I like to tell the students to wait until price at least comes down into 62% discount before they seek to take buy positions. So here you guys can see measuring from where London session bought from all the way up, extending price to the high from where London session started to sell their positions and pass price action over to New York. We can see what New York session manipulation window started to do. They started to push price down. Again, this is where New York session gets past price action, where the London New York session rollover starts and begins. New York session was not going to buy from a high. What are they going to do? They're going to manipulate price action down into lows to give themselves discount to then place their buy positions. As you guys can see, as soon as New York session opened, now we're going to get into the lower time frame nature of things. So let's just talk about our confluences so far. We have higher time frame discount, i.e. we can clearly see that taking our Fibonacci from where London session bought from all the way up to the high, we are now currently operating in New York session at a discount area of interest below 50%. Okay, so this is a significant area where if we see any bullish intent, we are going to seek to take buy positions, but we're not quite there yet. We want a couple more confluences and confirmation that price is going to reverse before we seek to add on to buy positions. And that comes in the form of manipulation moves, fractal break in market structures, and fractal discounted pullbacks, right? Something that I've gone over time and time again on this YouTube channel, reacting to all of those things after the market does what? Grabs liquidity. Again, taking you over to a blank screen, I want you all to pay attention to something that I covered in the previous YouTube video. We are seeking, whether it's a low or a manipulated low in the form of a double bottom, we are seeking for the market makers to come, show us a willingness to grab that liquidity, and then break fractal market structure and create new highs and new higher lows. Once the market starts to do this, we will seek to enter in to the right-hand side at a potential higher low. This is giving us a higher probability trade for the market to go in our favor, right? So we're seeking to enter in at something like this at a higher low over to the right-hand side after the market has grabbed liquidity from lows to the left-hand side, showing us a willingness to attack lows and make new structure highs, right? So very easy to understand, especially if you're patient, you understand manipulation in the market, you understand higher time frame discount, you understand liquidity areas and where the banking institutions are most logically going to target if they're not targeting other areas of liquidity, i.e. if we see them fail to attack lows, in this case, look at how this price action plays out. As soon as New York session opens, what do we see? We see a manipulative move for the banking institutions to push price down into discount to where London session banking institutions bought from, right over here to the left-hand side. We see areas of liquidity left behind during London session that the banking institutions during New York can seek to attack. The banking institutions during New York session, again, during the manipulation window, attack those areas of liquidity. As soon as we break out of the manipulation window, this is now the key to our CYPRX strategy. What happens? There's a couple of things that we are able to capitalize on. As you guys can see from the Discord screen share, multiple students caught the same trade without us sending a signal to the students. This should tell you that they are learning valuable information from the CYPRX course material. And some of the material that I give you guys on YouTube, dropping and sprinkling little gems on you guys. If you're interested in diving deeper into this strategy, you guys are more than welcome to join our community. We would love to have you. We are seeking motivated traders who are looking to excel in their trading career, okay? But carrying on with this trade, from this bullish reversal right here, where we see the market grab into potential areas of liquidity or dip into potential areas of liquidity, what happens? The market maker pattern that I tell you guys time and time again on this YouTube channel, that the market makers are the only people with the amount of money to make this pattern. We see a low, if you want to classify this as the low that the market makers are grabbing, and we see a reversal off of a psychological level, the 162-200, and a bullish match of momentum. The market makers are the only people with the amount of money to make this pattern, which is a forceful push into a potential area of liquidity, a match of bullish momentum that breaks previous market structure highs and creates a new market structure high. This is a logical market maker pattern where you can then say, if the market pulls back into discount from where they manipulated price and bought price, look at this. This is the significant higher low after the grab of liquidity, something that I mentioned to you guys time and time again on the YouTube channel where we seek to buy from. So the market rallies away from a psychological level. I'll go ahead and I'll leave that on for you guys. Here is a major bull in the 200 right there. We see it break a previous market structure high. So this market structure high out of the manipulation window. Again, we do not trade inside of this manipulation window. Okay. Here at CYPRX, we seek to sit on our hands and be patient and wait for a signal outside of the manipulation window once the New York session really starts to formulate. Why are we not trading this manipulation window? Again, I've told you guys multiple times. Think about it. Okay. The bank and institutional traders, when the market is rolling over from London to New York session, are waking up roughly at around 6 a.m. Eastern Standard Time. They're putting on their pants. They're making themselves breakfast, 7 a.m. They're driving to work. They're driving to their physical bank location, 8 a.m. They're getting to their seats. They're getting in their computer chairs. They're turning their computers on, monitors on, getting their coffee, getting ready for work, right? And then by 8:30, 9 a.m., after the manipulation window ends, they are doing what? Finally placing institutionalized trades. We have an institutionalized trader here at CYPRX in the community that has confirmed all this information. You guys can believe it or not believe it, but I've shown you multiple times here on the YouTube channel how this plays out time and time and time again. So we wait the trade outside of the manipulation window. Look at all the manipulation that takes place inside the window. We see sellers, right? People that chase bearish candlesticks. We see a trend line right here, bullish traders or bullish retail traders that would be seeking to draw some type of trend line on right here. I'll spread the charts out for you guys, placing over leveraged buy positions before the New York session opens right here, right? Premature buyers, premature sellers. We see the market makers forcefully push their way into that area of liquidity and reverse and break out of the manipulation window. This high right here breaks this previous market structure high. So here is the market maker pattern that we teach you guys to identify time and time again, regardless if you trade crypto, Forex, commodities, indices, stock market, it doesn't matter. The market makers all do the same thing. They attack liquidity to push price into their favor, to reverse, and then to go and attack more liquidity, right? Once you understand those key concepts, you understand psychological levels, you understand previous areas of interest where banking institutions either bought or sold from, buying and selling a currency pair in this market becomes like drinking water. Again, it is not all easy. There is a process to this. You have to be able to control your psychology. You have to understand that you're not going to become a millionaire overnight. This is going to take you time to grow a portfolio, but it is possible. Nothing that we constitute here is financial advice. We're simply just showing you guys how this strategy has worked for us. And if you want to hop on board and allow it to work for you, you have to be willing to accumulate the information that we are providing to you all, okay? So once the market breaks out of the manipulation window, breaks previous market structure, simply all we did in the fractal nature of things is we started to create logic for ourselves. Well, the logic is that if the market starts to pull back from discount from where they bought from, previous to where London session bought from, then we are seeking to grab liquidity from highs. And we know that the banking institutions most likely are not seeking to grab liquidity from lows. So again, logic in this trade was that the banks and institutions are going to attack highs. That is a bullish scenario that gives us the green light to minimize our risk and maximize our reward. So simply all we did to enter into this market was we took our fib from where the banking institutions broke at the manipulation window and bought from, extending that from the low to the high, all the way to the right-hand side. We can see where the majority of us here at CYPRX entered in at, roughly at around 70 to 79%. You can even see one of the students here, Lisette, said specifically that she does not enter into price until she sees a 79% retracement. Here's that screenshot right there. Just to show you guys, proof is in the pudding that we are actively trading this strategy. Again, if you guys want to learn the strategy, you're more than welcome to join the CYPRX community. Link is in the description down below. Schedule a Zoom call with me. I'd love to answer any questions and screen share with you all the course material that you're going to have access to. Beautiful 1-to-3 risk to reward ratio, coming and attacking sell side liquidity, or people who have over leveraged sell positions above these highs and over leveraged sell positions above these highs during the New York manipulation window. We attacked that liquidity. We pulled profit from the market. I personally closed my position. Here's my entry. I entered it at 162,395 on MetaTrader. You guys can see the entry right there. I roughly made around $6,000 this morning. Now that's not a lot of money, but for an individual who's worked a 9-to-5 job their entire life, that is a lot of money. That is a minimum wage salary in less than how long? Let's just say, let's measure this out. I just want to show you guys how long this trade took. Okay, from where I entered in at roughly to the top, roughly about an hour. So $6,000 in an hour, right? Doesn't seem like a lot of money, but the majority of millionaires and billionaires will tell you that the secret to making a lot of money is learning how to make more money in less time. And that is what trading Forex or cryptocurrency really allows you to do, especially if you're trading on a leveraged account. Stop having this mindset from all these YouTubers that flash you little Lamborghinis and their gold chains and the secret strategy and their secret indicator, blah, 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 that you're going to become some overnight success story. That is not going to happen to you, especially if you're watching this YouTube channel right now, because if it was, it would have already happened. Obviously, clearly, that is not going to happen. If you take a logical approach to this market, a mature approach to this market, and you join a community that actually cares about its traders, i.e. CYPRX, again, you are most likely going to come out on top. It is going to take a little bit of elbow grease on your part. It is going to take time on your part, understanding and accumulating the information and then applying that information to a demo account over a consistent period of time, but it is very possible. We have made profitable students. If you haven't seen those interviews with those profitable students, go back and watch them on the YouTube channel. I hope that you guys enjoyed this video breakdown explaining this 1-to-3 trade from the higher time frame perspective, i.e. because we're scalpers, we look at the higher time frame for us as an hourly to 15-minute time frame down to the 1-minute time frame entry. Blessings to you guys all. Smash that thumbs up button, subscribe to the YouTube channel. Don't forget that we are going to do a 100 XRP giveaway along with a CYPRX hat and t-shirt once we reach 10,000 YouTube subscribers. As always, be cognizant, be aware, and I'll see you guys in the next YouTube video breakdown.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh.